everyone. Thank you so much for joining, and we welcome you today to the webinar. I appreciate your time and presence over here. My name is Molly Shah, your host for today, and I've been working with Cygnet.One for the past 3 years in marketing, and we'll be diving into the invoice management system today. So I'll first start with introducing the speakers. Firstly, we have with us Mr. Anand. He's the associate partner in indirect tax at Dhruva Advisors. He's a CA and CFA level 2 candidate with over 19 years of experience. He specializes in Indian indirect taxes, GST, customs, excise, VAT, and has worked across sectors like manufacturing, IT, BFSI, and retail. We also have with us Mr. Ruturaj Bhide, a company secretary and law graduate with over 16 years of experience in indirect tax consulting. He specializes in GST implementation, compliance, litigation, and advisory. Ruturaj has worked across industries like auto components, IT, and real estate, and frequently shares his insights at tax seminars and webinars. And from Cygnet, we have with us Mr. Tapas Ruparelia, who is a qualified CA and CS with close to 15 years of experience. He specializes in handling gamut of services in indirect taxes, which include advisory, litigation, health check, and compliance services. Currently, as AVP at Cygnet.One, he leads a team focused providing solutions in India GST and e-invoicing, and as well as global VAT and e-invoicing. Lastly, we have with us Mr. Neeraj Hattisingh, the founder and MD of Cygnet.One. He's a seasoned entrepreneur with over 30 years of experience across industries including IT, manufacturing, chemicals, and services. Under his leadership, Cygnet.One has become a trusted partner in digital engineering and business process transformation, empowering organizations to enhance strategic decision-making and operational efficiency. Yes. So I guess we'll start the webinar. I'll hand it over to the speakers. If there's any issue, do let us know. Over to you. I'll be sharing my screen.
Thank you, Molly. And I'll just try and set the context for today's webinar. And then Anand, Ruturaj, and Tapas can kind of take it over. So basically, invoice management system was a big surprise even for GSPs and IRPs like us when it started. We were not prepared for it, and it came as a surprise, a sudden surprise for all of us. The most interesting part of it was it being non-mandatory in nature, but the contour of it and the way it was rolled out, for me, it was mandatory from day one. And I had many conversations with the industry leaders. I had many conversations with tax professionals. I had many conversations with the business leaders. And one point I tried and highlighted to all of them is that I cannot have a government agency doing deemed acceptance of my invoices without I taking an action onto it. So for me, from day one, it is absolutely mandatory. We have challenges around the credit notes and how it will be taken care of it. Lots of representation have been done around it, but there are certain methodologies which team will highlight onto it, which you need to take care of it and ensure it is there. This IMS system is not only for your vendors, but it is also for your sales invoices, because the actions that are being taken by others on your invoices are also going to make a difference in terms of your tax positions. So this is a very critical part, and this increases the footprint of the indirect tax professionals into AP and AR operations in a much more substantive manner. So this is kind of very critical, very important, and it put under the carpet. It has to be taken care of it. And if we do not bring in enough focus around it, this could really come back to bite us in future with unwanted litigations of different kinds. So this is very critical, very important, and a focus has to be brought in. And the type of audience we are seeing into the webinar today literally reflects the importance that the industry is giving to this particular topic. We have a great team which will be guiding you through the entire webinar. They will be able to kind of reply and answer to your questions. And even for one-to-one consulting or any kind of future support is required, you can reach out to us. without any hesitation, and we'll showcase and demo part of the system also, as well as how the IMS functions. We'll try and deep dive into that. Feel free to put your questions into the chat box, and team will try and answer them depending on the time availability to them. So I will pause over here and leave it to Anand to kind of take it over and walk through the presentation. Molly, you can share the presentation for them to walk through. Please put on full screen, please.
Yes. Thank you. Thank you, Neeraj, for setting in the context. So today now we'll dive into the concept of invoice management system, wherein we look at what is the objective of IMS, what are different actions available under IMS, what are the implications of these actions on your input tax credit as well as your output liability. And also we'll discuss what are the key challenges and what should be the next steps for the industry when we are looking at IMS. Can we go to the next slide, please? So IMS is basically a facilitation which has been provided by the GSTN network. Can we go to the next slide? Yeah. So IMS is basically a navigation or a facilitation which has been provided by the GSTN network, which creates a communication channel between the supplier and recipient in respect of data that is pushed onto the GST network. With IMS, as a recipient, you will be able to see invoices, debit notes, credit notes, and amendments to these documents, which are pushed into the GSTN system by your supplier. And you will also be able to take actions on these records to make sure that the right data is getting flown into your GSTR2B. Before IMS, or before October 24, the way things were happening is that as a recipient, I come to know about data on the GS about invoice, debit note, credit note only after a GSTR2B is generated. But with IMS, I will have an opportunity as to get a pre-intimation of data that is pushed into the system by the supplier. Now, all of us have encountered scenarios where the supplier has reported wrong information in the GSTR1. For example, it could be the invoice number itself, the tax amount, the invoice amount, and sometimes even the GSTIN number can go wrong at the time of filing the GSTR1. And we come to know about it only after we see that in the GSTR2B. But with IMS, as the recipient, I will get an opportunity to view if there is any erroneous data that has been pushed into the system by the supplier. And therefore, there will also be an opportunity available to go back to the suppliers and make sure that the data is corrected in a timely manner so that only the right input is coming into GSTR2B. So the whole focus or objective of IMS system is to minimize ITC errors, to basically improve reconciliations, and it also gives a window to the recipients to verify authenticity and genuineness of different transactions. Now let's understand how IMS is going to function. Now, if you log into your GSTN portal and under the user services, under returns, you will see a dashboard of IMS. Now, what happens is that when your supplier raises invoice, he puts it in the GSTR1, in the IFF, even if it's saved as a draft. And in case of suppliers who have to raise e-invoice, when they generate an IRN, when they create a document through invoicing mechanism, that data will flow into the invoice management system dashboard and will be available to the recipient for viewing it. And also the recipient can take different actions on these data points. So the difference that is coming through after IMS is that immediately after your vendor has reported a particular transaction, has saved a particular transaction in GSTR1, 1A, IFF, or raised an invoice, that invoice will be available for you to view it in the IMS dashboard, and you don't have to wait until GSTR2B for seeing that document or a record. Now, IMS essentially covers invoices, debit notes, credit notes, as well as amendments to these records. but there are set of documents which are not covered by IMS, which means these documents will not flow to your IMS dashboard, but they'll directly go to your GSTR2B. So import transactions, which are typically routed from my IceGate portal, ISD and RCM transactions, TDS, TCS credits, and if there are any invoices of which credit is ineligible due to timeline issues or place of supply issues, such invoices will also not flow to IMS dashboard. So for example, if you are a company registered in Maharashtra, and if you are receiving an invoice which indicates place of supply as Delhi, this invoice will not come to your IMS dashboard, and it will directly flow to your GSTR2B as ineligible credit. So essentially, only those documents on which, as a recipient, you have to take action are the ones which will flow into the IMS dashboard. Now, as a recipient, there are several actions that you can take in relation to data that is flowing into IMS. Can we move to the next slide, please? So, there are basically three actions which you can take as a recipient, which is accept, reject, or keep pending a particular document. Now, if the data that is reported by the supplier is accurate, then you can accept that invoice, in which invoice, debit note, credit note, as the case may be, and it will flow into your GSTR2B once you accept it. If the data is inaccurate, so if the invoice number is wrong, if the invoice amount is wrong, whatever could be the problem with that invoice, if the data is not accurate, then you have an option of rejecting that document, in which case the rejected document will not flow to the GSTR2B. Now, this is a very important action, and one has to be extremely cautious while rejecting any document, because the effect of rejection of a document is that it is not going to flow into your GSTR2B at all. So if you reject an invoice, it will not form part of your GSTR2B, and therefore you'll not even be able to take credit of that invoice. So rejection is one action one has to be very, very careful with. And the third action that as the recipient you can take is keep a particular record pending. So if you don't want to accept or reject a particular invoice or a debit note, you can specifically mark it as pending so that you can take action on it in future. If, let's say, as a recipient, you do not take any of these three actions, if you do not accept, reject, or keep pending a particular document, then the whole set which has flown into your IMS dashboard will be deemed to be accepted. So what Neeraj was saying in the beginning, that as a government has given a deeming acceptance, unless you specifically act on a particular document, all the documents will be deemed to be accepted, and they'll move to your GSTR2B. Now, there are some specific important pointers about these actions, which we have covered on the next slide. Can we go to the next slide? Yeah. Now, I mentioned that there are three actions which we can take, pending being one of the actions. Now, pending action is not allowed in respect of specific sets of document, credit note being one of them. So original credit note, upward amendment of a credit note, downward amendment of an invoice, etc., are the type of documents where you cannot keep that document as pending. So you either have to accept it or reject it. There is no option of keeping it pending. The reason being, if you look at these documents, these are the documents or records through which supplier reduces his liability. When a supplier issues a credit note, he's basically reducing his liability. So you do not have an option of keeping that pending. You either accept it, in which case that reduction of liability will get accepted, or you reject it, in which case that reduction of liability will get rejected. So a pending action not allowed in respect of some of the specific documents. Now coming to, like I mentioned, in case of IMS, the data will be appearing or will be available for the recipient right from the minute it is saved by the supplier. So the minute any invoice is raised, or data is saved in IFF, or data is saved on GSTR1, even before filing of GSTR1, that data is going to be available with you for taking actions. So if you see a particular invoice with some errors in it, even if GSTR1 has not been filed, you can very much take an action of accept, reject on the particular invoice, credit note, debit note, as the case may be. But if you have taken an action on a particular document and the supplier amends the details of these documents before filing GSTR1, then the amended document will replace the original, the original document will get replaced, and irrespective of whatever action you have taken, the filed data will flow into IMS. Now, what is the time limit? Till when can I take this action? Now, as a recipient, I am allowed to take action right from the minute a particular document is reflected on my IMS portal till the time I file GSTR 3B for that particular month. So let's take an example. For the month of Jan, uh, whatever e-invoices will get generated by my vendors, they will start appearing in my IMS dashboard. I can start taking action right through the month of January, and also up till 20th of Feb, till the time I file my 3B, I will be able to take action of accept, reject of these invoices. And once I have filed the GSTR 3B, then all these invoices, which are either in accept, reject, or no action category, they'll all get moved out of my IMS dashboard. And only those documents which have been marked as pending will remain in the IMS dashboard. Now, I'll request Tapas to explain us how the invoice flow will happen post introduction of IMS system. Can we go to the next slide?
Yeah, thanks, Ruturaj. Almost the points are covered in the previous slides, but I'll quickly take everyone through the flow of how the things would work in the IMS. So as mentioned, as soon as a supplier generates an e-invoice, that e-invoice gets pushed from the IRN to the GSTR1 module on the GSTN portal. And as soon as an invoice appears in the GSTR1 module, the same invoice gets replicated onto the recipient's IMS portal in the recipient view. Similarly, if an invoice is not covered under the IRN provisions, in that case, whenever the supplier goes to the GSTR1 module and either saves a document, a list of documents, or straight away goes and files the returns, as soon as the documents are pushed into the GSTR1 module, those documents get reflected onto the IMS module. So let's say we are on the 7th of January today. Even if somebody would have raised an e-invoice on me yesterday, that is on 6th of January, and if the IRP has right now pushed this invoice, which normally takes between 4 hours to 48 hours, if that invoice has been pushed into my GSTR1 right now, it would also appear into the IMS of the recipient. Similarly, for the month of December, people who have not generated e-invoice, if these people are saving that draft, is there an issue with the that? Yeah. If the suppliers are not covered under e-invoicing, and if they are saving their GSTR1 on the portal, which they would also be doing right now for the previous month, I can see those invoices into the IMS system. Now, as Ruturaj explained, there are different actions that I can take. I will not delve into those actions, but based on the actions that I have taken on the 14th of the next one, so for the month of December, whatever actions I would have taken till 13th of January, the IMS module will push these invoices into the GSTR2B based on the actions that I have taken till the 13th, and my GSTR2B will get generated. And as highlighted, if I want to again go back to the IMS system and change any of the actions, I can very well do it. I can come back then to my GSTR2B and recompute my GSTR2B, and I can do that. I can do it as many times as I want to. And once I feel that the final GSTR2B that is generated is final, I can move to the GSTR3B. I can right now the GSTR3B is also not locked as of now. So I can, if still required, though not advisable, I can make changes to my GSTR3B and file my GSTR3B. As soon as I file my GSTR3B, my GSTR2B that was generated at last, that is the final GSTR2B that gets frozen. My GSTR2B doesn't get changed after that. And whatever actions I have taken onto my IMS, all the accepted as well as rejected transactions move out of the IMS system. And it also has to, I mean, one also has to understand that GSTR 2B is going to follow the same principle that it is following right now. So the example that I gave, that if somebody is uploading an invoice on 6th, generating an IR, and it gets reflected on my IMS on the next day, which is on 7th of January, if I don't file the return by the 11th of February, then while it is an IMS, I might have accepted that transaction. It would still not flow to the GSTR 2B, because GSTR 2B follows the conditions specified in section 16, as well as the specified rules, that the GSTR 2B will have only those invoices which have been filed within the due date of filing the return, which is for the normal taxpayer, it is the 11th of the next month. So while my IMS, after I file the GSTR 3B, while my IMS would have the pending transactions of the previous month, it would also have those transactions for which returns have not been filed on time, and for which the invoices pertain to the next month. So let's say right now I'm generating an IMS, my GSTR 2B on the 14th of January. It would have the transactions of the December month for sure. It would also have those transactions for the month of November, where not only I had kept those transactions as pending, but even where the returns of those November month were filed after the due date, that is on 11th of December or thereafter, those transactions would also be there in my IMS system. And if these were filed in time, those would flow to my GSTR 3B. There are certain points with respect to a specific transaction, but I think I mentioned on this slide, but Anand has certain additional points which might cover these. So I would hand over further to Anand to take this up. And if at all any point is left out, we'll cover that. Over to you, Anand. Thank you.
Thank you, Tapas. Thank you, Rituraj, for laying the context. Good evening, everyone. IMS is, one of the important changes that has been implemented. In fact, the impact of this IMS goes just beyond the way the GST compliances are being handled. It impacts the O2C process. It impacts the P2P process. It will impact the way the vendor invoices are getting accounted for. This if you remember, when GST law was implemented, there were specific provisions which had the concept of accepting or rejecting of an invoice, which in turn impacted the tax liability. Later on, those provisions were specifically moved out from the GST law. Now, what we are seeing through IMS is those provisions, maybe the entire concept is being brought back. As we stand today, while there are no, IMS does not have a legal backing. What GST Council in its latest meeting, 55th Council meeting, has recommended that they will give a legal backing by way of incorporating specific provisions in the GST law with respect to the IMS tool and the actions being taken thereon. We will try to cover, in this session, the impact of different actions that are being undertaken on different type of records. Kesha, can you move on to the next slide, please? Yeah, down further. So depending upon the record type, if it is an invoice, irrespective of the action that is being undertaken, whether the recipient accepts, rejects, or pending liability, it doesn't impact the tax liability of the supplier. But if subsequently there is any amendment, or even for an amendment, upward amendment in debit note or a invoice value, irrespective of the action, it doesn't impact the tax liability. But in case there is a downward revision in the invoice or the debit note, there is no impact on tax liability, only if it is, accepted or kept as pending. But if the downward revision is rejected, then the supplier's tax liability will be increased basis the rejection as an action taken by the recipient. Keshav, move on to the next slide. With respect to credit note, there is no the tool allows only two actions to be taken, either an accept or reject as an action. So if the credit note is accepted, there is no impact on tax liability. But if the credit note is rejected by the recipient, there is an increase in tax liability, and this is, major area of concern for businesses. Typically, what happens, and this is our experience in business scenarios, is that uh, sometimes the businesses will raise an invoice. There could be certain errors, and the time limit to rectify those errors within 24 hours could get expired, and the businesses will typically then issue a credit note. Now, credit note, nowadays, credit note linking to original invoice is not there. So you will have both invoices as well as the credit note flowing onto the IRN data, and through IRN, it will flow to the IMS tool. From a customer standpoint, he can still, keep the invoice as pending as an action, but he can still reject the credit note, which will then impact the tax liability. Okay, so that's where there has to be this requires the lot of changes in the process, stakeholder training, because in case as and when the credit note is being issued for any errors in the invoice and the credit note itself is not given to the customer, at least some sort of communication has to be sent out so that the rejection as an instance can be minimized. With when we have a upward revision in credit note, if original invoice and both amendment is accepted, there is no impact on tax liability. If the original credit note values were not accepted but the amendment has been accepted, there is no impact on the tax liability. But if the original values were accepted and the amended values or the upward revision is rejected, or in a scenario where both original and the amendment is rejected by the customer, upward amendment, then there will be an increase in tax liability. Similarly, when there is a downward revision in the credit note values, any action where the original credit note was accepted and the revision, any action of either accept, reject, or pending doesn't impact the tax liability. The tax liability gets increased only if both the original and the amendment values are rejected by the recipient. So I think this is one of the major area where businesses will have to, rethink the way their O2C process work, and including, is having a proactive engagement with the customers with respect to credit notes, if required, amending the contracts on account of any erroneous rejection by the customer, resulting into an increase in tax liability. Kesha, you can move on to the next slide. Similar to what we have on outward, this IMS tool also has an impact on, the eligibility to claim ITC. Uh, as stated by Rituraj and Tapas earlier, any data which would be forming a part of 2B basis the actions that are taken by the recipient. If the recipient accepts the invoice, then it will flow into 2B, and if all other conditions are met, the recipient can claim an ITC. If the record is rejected, then it will not form a part of 2B, so no ITC can be claimed. Similarly, when it comes to any upward revision, only if there is an acceptance, then it will form a part of 2B for claiming of an ITC. If the record is rejected, no ITC, additional ITC will be flowing. In case of downward revision, if it is accepted, it will lead to a reduction in the ITC part. But if the downward revision is rejected, it doesn't impact my ITC that is already claimed. Kesha, move on to the next slide. This is another area, where if the credit note is issued by my vendor and if I accept it, it will lead to a reduction in tax liability. If I reject it, there is no change in ITC, but if I reject it, it will impact his tax liability. Now, here also, from a process standpoint, there could be changes required in the way the accounting is being done. Quite frequently, we have scenarios where we order, say, 100 quantities, vendor, delivers 100, and it is subsequently found that two quantities are damaged. So, businesses or the P2P team will account for only for 98. Okay. and it will flow into those in my purchase register only credit with respect to 98 will flow. But then vendor will have to issue a credit note. And at the time of doing the compliances, tax team may not be aware that this credit note is pertaining to which activity. And if that rejection and if that credit note is rejected, it will lead to an increase in tax liability for the vendor. So, the processes will have to be now either amended or there has to be an active engagement with the vendor with respect to any action being taken specifically for rejecting the credit notes being issued. Uh, Similarly, when we have credit note, there is an upward revision in the credit note. Acceptance thereof will lead to a reduction in the ITC part. If the upward revision is rejected, it doesn't impact my ITC. Pending as an action is not allowed. Same goes for downward revision in credit note. One important point that needs to be taken care of is that whenever there is an amendment, the action has to be undertaken for both the original record as well as the amended record. And the impact on the tax liability will depend upon action taken for both the records that are there. Kesha, you can move on to the next slide. As we stated, what is the impact on GST compliances? The data flows into 2B only once the file record which are accepted or deemed to be accepted in the IMS tool. Rejected and pending records are excluded. And if, as of now, GSTN has given a functionality that if no action is taken by 14th, all records will be deemed to be accepted and would be forming a part of 2B. But subsequent to that, if there is any change in the action that is, taken by the businesses, then 2B has to be mandatorily be recomputed, which this in turn impacts, the GST compliance processes. Prior to October, people used to just rely on 2B that was hard coded by 14th and do the reconciliation and and complete their compliances for a particular month. But this is an incremental step which is to be performed, and there is a limited time of performing an action because GSTR1 due date is 11th, 14th, 2B is to be get generated. So between 12, 13, all the actions will have to be undertaken. For quarterly tax filers, invoices that are filed or saved through IFF will also flow into IMS, and 2B will be generated on a quarterly basis based on the recipient's action. Keshav, move on to the next slide. Now, one important aspect is that IMS we have to take action for each and every record, and this is for large organizations. This leads to a significant increase in the compliance time spent. Okay, and typically large organizations will have uh, you know volumes of invoices. In some cases, it may not even fit for into one single Excel file. So there is a need to have integration or adoption using of a technological solution. There are restrictions on pending, say for example, credit note, while there are representations being made that uh, I cannot perform a pending action for a credit note. And this has a severe impact on the tax liability, both on the input side as well as on the output side. There is an increased reconciliation burden because I'll have to do reconcile with my IMS data, then again with 2B data in a limited time frame. So multiple reconciliations is another area that needs to be focused upon. Keshav, move on to the next slide. So what next steps, that businesses would typically leverage upon is you leverage on the technology solutions, uh, automate the IMS processes. The idea would be to reduce the compliance effort so that bulk actions can be performed, maybe including a technological solution for a near real-time, performing of action based on as and when the data is auto-populated in the IMS solution, strengthen the reconciliation process. And one important aspect is doing a continuous proactive engagement, providing training with relevant stakeholders, including internal business team, sales team, P2B team, with the customers as well as vendors. Unless that is being done, there could be, unnecessary increase in the tax liability that will be there. Keshav, move to the next slide. So I'll just now hand it over to Tapas to take it over, on what can be done from a technology standpoint.
Thank you, Anand. Thank you. So this is the slide that is showing the journey of GST over the years. And we all remember that in July 2017, when GST came in, there was something called GSTR1, GSTR2, and GSTR3. Initially, most of us tried to file the GST returns, the GSTR1, GSTR2, as well as GSTR3. But the two, which involved not only reconciling your inward data, it also, and what we are seeing currently, the accept, reject, and pending. At that time, it was it was considered as on hold action. Apart from that, even if there were certain mismatches, the recipient was allowed to report those mismatches. If the certain invoices were missed out by the supplier, the recipient could upload those invoices. All those facilities were envisaged at the time of when GST was rolled out, but due to technological challenges, those GSTR2 and GSTR3 didn't see the light of the day, which is where the GSTR3B was introduced as a stopgap arrangement, and it became a final return in the entire scheme of the GST returns. And slowly over the period, they introduced GSTR2A, which was initially only meant as an intimation on the recipient side, where the basis the GSTR2A, the recipient could file or report those additional documents and file his GSTR2. But from October 2019, this GSTR2A statement, which was made available since 2018, but since October 2019, the government said that we would now start looking at your GSTR2A vis-a-vis the credit that you take, and they started saying that the maximum cap of credit that you can take, it would be 120%, which was reduced to 110 by way of this rule 36.4, which was also reduced to 105%, and later on in 2022, the GSTR2B was introduced, and in between certain big amendments came in where they had introduced e-way bill from 2018. E-invoicing, a big landmark into the GST system, was introduced on October 2020. And we see that after this e-invoicing, the biggest change that is coming into the GST, or that has already come into the entire scheme of GST things, is the IMS that has been introduced, that we are seeing right now. So these are the changes which are coming in. New invoice management system, it has already been made live from October 2024. And I see a lot of questions in the chat box asking when would IMS be made mandatory. So right now, this is the question being raised by everybody is that who gives the government a power to generate my GSTR2B on the basis of the actions that I take on the IMS. If I have by mistake rejected certain transaction in the IMS, where is it written in either any of the section or the rules saying that my GSTR2B wouldn't have those transactions? So clearly, IMS does not have the backing of the relevant provisions of the law. But then the recent council meeting, the 55th GST council meeting, has a sort of proposed amendments to the GST Act as well as the GST rules, so as to give the IMS a legal backing from the law. It contains all the provisions as to how the GSTR2B is going to get generated, how is the impact of credit note would be handled. If accepted, the credit of recipient would be reduced, or if rejected, the liability that was reduced by the supplier would again get added to the liability of the supplier, so on and so forth. All these changes have been proposed by the GST Council, and it is one can very fairly assume that these amendments would be pushed through into the budget that would be announced by towards the end of February. And once the budget has been passed and 50% of the states also make the changes to the law, these amendments would be notified. So thinking or committing a date right now may not be a very good thing to do, but I think it's reasonable to assume that by mid of next year, you can definitely see IMS being made mandatory, just like GSTR 2B was made. GSTR 2B was made live in 2021. People were not taking it seriously, but Section 16(2) AA was introduced from January 2022, wherein it became mandatory, and everybody have been following it since then. Same seems to be with the IMS. Once the amendments are pushed through the budget, I think the IMS would be there. Apart from that, there are also certain other changes. There is something called hard locking of liabilities of GSTR 3B. There was an advisory by the GSTN published on 17th of October, wherein the first advisory said that from January 2025 tentatively, we are going to block not only your outward liability, but also your inward liability. For outward liability, you have your GSTR1 as well as GSTR1A. So whatever changes you want, you make through GSTR1A, but your GSTR 3B is going to be the sum of 1 and 1A, and we are not going to allow you to amend that. And that advisory also said that we have also given you the control of your input tax credit through the IMS. So your input tax credit also would be locked in the GSTR 3B, and that would not be allowed to be changed. Later on, the GSTN modified this advisory and said that IMS being an optional functionality right now, from January, tentatively, we are going to lock your outward liabilities. Inward liabilities will still be able to modify even if your GSTR 2B has been generated through IMS. Once IMS is mandatory, they will have a look at it. But this is something really important. As of now, as of 7th of January, there is no concrete information on this as to whether they are actually going as per the plan of hard locking the liabilities from January. But you never know. The due date is of filing of GSTR 3B since for the month of December is 20th of January. The announcement might come anytime before the 11th. That is when you start filing the GSTR 3B, or probably after the 14th when your GSTR 2B gets generated. Something another important is that ISD is going to be mandatory from 1st of April 2025, and we are going to have another session next week which would cover detailed nuances of it. Please do attend. And there are certain amendments, but due to the paucity of time, I will not go into that. Please, next slide, please. Something that keeps on coming up at various forums, the questions that keep coming up, that now that we have to take actions, and these actions are particularly because I have to take 3 different actions, whether accept, reject, or pending. I have to take these actions on each invoice. So can I take those bulk actions somewhere? So right now, if you go to the GSTN portal, and if you have more than 500 invoices, this is how the GSTN portal shows. It shows that what it shows that you cannot take action of more than you cannot take action if there are more than 500 line items. You cannot take I'm sorry, there is some technical challenge. So you cannot take action if there are more than 500 invoices onto the GSTN portal. So what happens is, in that case, you might have to look at some technological solution which would help it, and which is where we also wanted to demonstrate our functionality. I will share the screen for a second. Please confirm if my screen is visible. Yeah. So in our in our Cygnet GSP solution, one thing that we have done is to have a default settings for each of the different IMS or each of the different reconciliation sections. So by this time, you would have also understood that in order to take any action on the IMS system, you would have to have a pre-reconciled data. So even if you want to do an IMS reconciliation on a real-time basis, so because IMS is going to reflect the data on a real-time basis, if you want to have a take action on IMS on a real-time basis, you also have to have your IMS actions or your reconciliation on real-time basis, on the basis of which you will be able to take action. So you would want to know whether the particular invoice appearing in the IMS, whether it is actually reconciling with your purchase register data. If there is certain item which is there in the IMS but not in your purchase register, you might naturally want to keep it pending. If something is exactly matching, then you might want to accept those transactions. But In order to take these decisions, I think reconciliation is something really important. So most of the users, if you are using our Cygnet tool, you would know that we have a very robust AI-based reconciliation module, wherein not only the exact matched data is coming in, we give 28 different buckets wherein you get different types of reconciliation, whether certain invoice criteria are not matching, amounts are differing, or dates are differing, but there are 10, 28 different combinations wherein we give reconciliation. So what we have done is, based on these different reconciliation items, we have given a standard setting within within our GSP portal, wherein if you go to this reconciliation setting, click on IMS action, you have the first option that you have is to either have a default action for all the invoices that come in into the IMS. So if you want to actively accept all the transactions, you might select and accept as a default action, or reject or pending as a default action. But this is something which is not advisable. If there are certain clients who would want to have first park all the transactions as pending, then only do the reconciliation, and once the reconciliation is done, they would want to move this transaction into either accept or reject bucket. These people can use this default action, or there is an advanced setting where one can select, go into this custom and say that in case all the invoices are matching, I would want to accept those transactions. If certain invoices are matching by tolerance, again, I want to accept those transactions. Matched by tolerance is nothing but where you tell the system that I have a tolerance of, say, 10 rupees or 100 rupees when it comes to the tax amount. If everything else is matching and the difference in the amounts is between this tolerance limit, it would be considered as matched by tolerance. So if I have set up a tolerance limit, I can accept these kind of transaction. I can say that if the transaction is only in IMS, I would want these transactions to be kept as pending. And then again, I can go that if there are transactions which are mismatched, I can also select that if the transactions are getting mismatched, let's say based on POS, I don't want to tolerate these kind of mismatch. I want to straight away reject these kind of transactions. I can say that if, let's say, the transaction is mismatched only on the basis of the document, I would like to keep it pending and then enter into discussion with my supplier and get it corrected. I can do that based on these default actions. This is a one-time activity. You can have these actions and can save these actions. After saving these actions, as soon as your reconciliation is done onto the system will automatically show this action. So I will also go to the IMS module in our GSP portal. So this is how our IMS portal looks, IMS module on our GSP portal looks like. This is a replica which is similar to similar to what appears on the GSTN portal. It shows what are the total number of records, out of which how many are there is no action, accepted or rejected. These kind of two different amounts that you are showing is something that is there on the GSTN system, and there is something which is there on the Cygnet GSP, but has not been pushed onto the GSTN portal. I will go to the reconciliation tab, which will give you a flavor of what I was explaining till now. So let's say you have given certain settings, and when you come to this reconciliation module, as the reconciliation has been done, the system would have taken the default actions. So if there is some transaction has been matched, the system would have automatically marked those transactions as accepted or rejected or pending. Now coming here, if you want to change an action on certain transactions, or let's say you had not selected those default actions, you have not selected those default actions in the settings, you can again come here, go to more action, go to bulk action, and select from here as well that I want to mark all the match transactions as accepted, and apply a bulk action. You can also reset all your transactions based on certain matching criteria, and that would happen onto the system. So even after giving a rule-based accept, reject, or pending actions, if you want to still change actions on certain transactions, you can definitely come here and make those say outliers transaction where you want to still keep a transaction pending or do something. You can come here and change those actions, and that is how it would work. Our system, once the reconciliation has been done, you can go to reconciliation action and then push those IMS actions onto the GST system. Whatever actions have been taken onto the Cygnet GST portal, GSP portal, you can go back and push those actions to the GSTN system. Similarly, our system automatically downloads the IMS dump on a daily basis at one time during the day. And so as in when you log in the morning, you would have the fresh IMS data, which has been pulled by the system afresh. And if there is also any afresh data of PR that has been synced onto the system by way of some system integration, that data would also get automatically reconciled. And all you have to do is just review those reconciliation and push that IMS action onto the GSTN system. But if you still want to have that IMS data on demand, we have given a button of download IMS data from the GST system. You can click on this download IMS data, and you can again have that live data if you want that. Similarly, you can recompute your GSTR to be you view your fresh GSTR to be, everything can be done. And we have given different filters here where you can look at your different data. So let's say you want to look at what are the accepted, rejected, or pending transactions. One thing somebody would also have, I have seen one question wherein somebody has asked that what happens if after uploading a data through IRN, after pushing the data through IRN onto the GST portal, if the transaction is slightly changed, the date or the invoice number or something is changed, then the way the GST portal behaves is that it will reset the action. So on the GSTN portal, let's say there was a transaction which was matching, you went onto the GSTN portal and you've accepted that. And if the supplier changes that transaction before filing the GSTR1 on the 11th, the GSTN system would reset the action on that transaction. Whereas onto the Cygnet portal, if there is certain change which is made on a transaction after it has been filed, the Cygnet system will show it as an altered state. It will show that, hey, user, you had taken certain action on this transaction, and now because of some change, this transaction has been altered onto the system. So these are the different filters that are there available, not only based on the actions, but even based on the different reconciliation actions as to whether it's matched by tolerance, whether what is the reason of near match transactions, the taxpayer status, as well as you can also have blacklisted vendor. If you know that there are certain vendors who are raising an invoice to you which absolutely do not belong to your purchase, you can have them onto a blacklisted list, wherein the system, irrespective of the matching status, would reject the transactions of these kind of vendors. And you can also filter these transactions based on GSTIN, trade names, document number, dates, various filters we have. We also have more filters where you can, apart from these regularly used filters, you can go to those transactions, apply your filters, and then take bulk actions. And apart from reconciliation, we also have an interesting module where you can see reconciliation based on each of your vendors. The different line items of each of your vendors can be seen. So if you want to perform a reconciliation or take actions for each of your invoice, for each of your vendors separately, you can come to this vendor reconciliation and look at this reconciliation. So we have tried to understand what are the problems specifically with respect to taking bulk actions onto the GSTN portal, and have tried to automatically augment this entire IMS module within our reconciliation system, so that the user can only spend time on reviewing different actions and not spend time on taking an individual actions for each of the invoices. So that was a quick demo. If you want a detailed demo from us and want to understand how the IMS module can help you, please reach out to our team and we'll be happy to get into a detailed discussion. Over to you, Molly, for question and answers.
Thank you so much, everyone. One second.
Yeah. You able to hear me? Okay, great. So we have thank you so much, everybody, for the session, for the insights on IMS. And we have quite a few questions from the audience. I'll just put it out to the audience, to the speakers, and you can let us know who will be answering the same. Right? Okay. First of all, the question I think a lot of people have asked is, will we be sharing the PPT after the session? Yes, we will be. So there's no issue over there.
Molly, I have gone through the questions, and some of the
Yes.
questions required a very detailed reply. So I think you can take the first 4, 5 questions because of the time, and the balance we can respond maybe in detail at a later date.
Sure, we can do that. I'll just go through a few of them. Is IMS mandatory? I think that's already been answered in the PPT, but if anybody wants to touch upon that again.
I think we have that.
Yeah.
We can go to the next question.
Okay. Once the recipient rejects an invoice or credit note, is the supplier required to re-upload the same document on the GSTN portal?
Anand, you are on mute.
So I think there is one both a law aspect and a practical aspect. If the credit note or an invoice is rejected, and if it is in rejection of an invoice, doesn't impact the tax liability per se. Okay. And with respect to rejection of the credit note, there is a increase in the tax liability. Now, with regards to re-uploading of the data, is somewhere, we'll have to see how it evolves, because GSTR1 has a functionality where a document is already uploaded and it is a part of a file record. The same record cannot be re-uploaded once unless there is a change in the value part of it. Okay, so that's where I think if a credit note is rejected post filing of GSTR1, whether it can be re-uploaded is somewhere from an IT perspective we'll have to see whether the GSTN portal will allow that document to be re-uploaded again. I do see a challenge there.
Just to add to what Anand mentioned, I think this is one critical reason why rejection of any document should be considered very, very consciously. And also on the dashboard, you will see the actions which are taken by your recipient of accept, reject, and these actions can be amended also by the recipient till the time the GSTR 2B is generated, and for that matter, till the time GSTR 3B is generated. Therefore, keeping a tab of any such actions is also relevant from a supplier perspective, so that if there is any incorrect rejection which you notice in your supplies, the customer is intimated on a timely basis, and you can have them or rectify those actions.
And those rectification has to be done before the customer files his 3B. Once his 3B is filed, the rejected records flow out of the IMS of the system.
So this is one point I just wanted to add from our side, is that in Cygnet system, we have taken care that whatever actions you have taken at each instance is recorded and stored into the system along with the logs. So in future, if you need to kind of relook at it, what has been done in the past, you get an opportunity to do it. And somebody has asked a question that how this is different from the offline utility which has been provided by the government. So this is exhaustively different from the offline utility because all this tracking is being done into the system and the reconciliation also happens. So the two parts are clearly merged into the system. They are not independent in nature.
And to add, once the transactions have been accepted or auto-accepted or rejected, once the GSTR 3B is filed, the transactions which went to the GSTR 2B, all these transactions move out of your IMS. You will not be able to see those transactions. Whereas at Cygnet, even if the returns have been filed, you can go back to whatever history you want and you can see which transactions were rejected, which actually did not move to the GSTR 2B, or which were even accepted and moved to GSTR 2B, which will not be there onto the GSTN portal.
Okay. Great. The next question is, sales credit note IRN is generated but not considered for GSTR1 return and filed on 11. So whether it will flow to IMS for customer action. And I think Anand said he wants, yes.
Yeah, so I think the IMS database gets updated basis, the GSTR1 that has been filed. So if anything is not from the part of GSTR1, all those records will be moved out of IMS.
Okay.
one question I would take. It says documents accepted in IMS but not flown into GSTR TUB due to section 16 condition, due to section 16 condition not yet fulfilled probably. How does that appear in IMS tool? So in IMS, see, IMS is a live data. It will have the transaction till the time, from the time it has been uploaded onto the GSTR1 system, and till the time these transactions move on to the GSTR2B and the GSTR3B has been filed. So let's say a transaction for the month of say December has been uploaded onto the IMS portal, and it was the return was filed on the 12th of January instead of 11th of January. But you have taken an accepted action. This transaction, even if you have accepted it, it will not flow to the GSTR2B, which is generated on the 14th of January. It will stay in the IMS. If you have taken the accept action, it will remain as an accept transaction, but it would flow to the GSTR2B, which is generated on the 14th of February, not the 14th of January. If the question was from this perspective that the transaction is there in IMS, the return was filed in time, but let's say the other condition of section 16, which is you have not received the physical invoice, or if you have not actually received the goods or services, and you want to keep the credit in abeyance, which in terms of circular 170, you would be taking the credit right now and doing a temporary reversal in clause 4B2. These kind of transactions are the transactions which are to be kept marked as pending. Once your section 16 conditions are fulfilled, in the next month you can accept these transactions. They would flow to your GSTR2B, and then you are good to take the credit. So that these kind of actions would ease up your life, so to the extent of making a temporary reversal and then re-availing the credit later. I think we can take one more question, Molly. And
sorry, Molly, you're on mute.
sorry.
When credit note gets rejected by the customer, how can the supplier know the list of customers in case there are many huge transactions?
So there is, as Ruturaj also highlighted, there is something called a supplier view also. The actions that we are talking about is a recipient view. In your recipient view, you will be able to go and take actions on all the invoices that have been raised against you. Then also there is something called supplier view, where you will be able to look at all the actions that your recipients have been taking. So if your recipient has rejected one of your credit notes, you can go to the supplier view on the GSTN, and you will be able to see the actions that have been taken. You can filter out the rejected transactions and see whichever ones have been rejected. In our Cygnet module, once you upload your sales register, which would have your invoice, debit note, credit notes, all these line items, once the actions have been taken by your recipients, we can replicate these, whatever actions are there in the taken by your recipients. These actions we are replicating into the GSTR1 module on the GSTN portal. So for each invoice that you would have uploaded, you will be able to see the actions, whether it has been accepted, rejected, kept pending, or there was a no action.
Thank you, Molly. Thank you, Dhruva team. Thanks, Tapas. Thanks all.
Thank you. Thank you, everyone.
Thank you, everyone. Thank you, Thomas.